Hello traders, Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. For those of you that are watching this video for the first time, I want to welcome you and thank you so much for tuning in. This is something that I usually do every weekend, where I try to where I make a video where I show you guys a few things to look and to keep an eye on as in the forex market as we head into the following week of trading. So anyway, in today's video I'm going to be taking a look at the Kiwi, and let's head over to the charts. So what I've done is I've put the Kiwi on a weekly time frame, because I want to show you guys how I'm going to be able to use the language of the market, which is structure, to be able to read the structure of the market and try and identify good trading opportunities, which is going to give you the best risk to reward ratio and with the highest probability of being a winner. Because after all, that's what trading is about. It's all about taking your time to plan that one good trade and moving on from there. So anyway, I've got the Kiwi on the weekly time frame, and the first thing I'm going to do is I'm going to take a look at what the market has done and what the market is doing currently. So looking at starting from here, if I look at this impulse leg, this is what happened. We had a huge impulse move to the upside, and then the market had a retracement, or the outside return if you want to call it that, and then we had another move, another impulse leg, forming a new structure high. So if you understand the structure of the market, this usually means the market is bullish, because once you get this is a bullish structure. And what usually happens is, once you see a bullish structure in the market, is a sign that the market is telling you that it's about to be in a bullish trend. So let's look at what happened, what the market did after that. So we had another retracement, and this time the market coming into the previous structure. Look left, although we come in a little bit deeper. And then we had another rally, forming another structure high. This is getting in the way. So yeah, so we can see continuation of the bullish trend. But then the market came back down. We had a little retracement. Obviously, as expected, you would expect this retracement to come into this previous structure. But again, we come in a little deeper. But as long as we didn't break this previous structure low, we know that the market is likely to stay bullish. So we came in a little bit deeper, but would still form the higher low. So the market rallied, but this time we didn't break the previous structure high. So the market sort of traded sideways. We had another move down, forming another higher low, and then we had another move up. Even though we broke the previous structure high, but we still haven't broken, the highest high of this market. So the market came back a little bit down, kind of traded sideways in a little channel right there. But all the while, we can see that the market has been forming higher lows, higher lows. Look at this structure. It hasn't really broken any of these lows. So technically, the market is bullish. Whichever way you look at it, the market is still bullish. Because as long as we didn't break these lows, the market will continue to stay bullish. So even though we came into a little bit of sideways trading, into a little bit of consolidation, but the market still keeps making on higher lows. So look what happened when the market came into this previous structure. You would expect this market, if the market is going to continue bullish, you would expect it to break this highest high. But the market came in, formed a double top, and then sort of like fell off a cliff really, because we had a huge move to the downside, which violated this 1, 2, 3, these 3 higher lows, and came into the fourth one, and then we had a little rally. Look where the market came back into the previous structure, and then we had another huge impulse leg to move to the downside, violating all these lows. So the market kind of broke all the higher lows that it set, and this is usually a sign that the market is about to turn bearish, simply because we put in a bearish structure here. We had a move to the downside, forming an initial structure low. We got an outside return, and then a new structure low, breaking this previous structure. So the market, technically right now, it's bearish. So now that we've established that the market is bearish on a higher time frame, so let's try and drop this market down into the daily time frame and see if we can find a trading opportunity. So if I drop this down to the daily time frame, we can see that the market came back down into this low, and then sort of kind of traded sideways. Because oops, that was the wrong tool. Let me take that off. I'm looking for the horizontal line. There you go. Put the horizontal line there. So we can see that the market came into this sort of channel and sort of traded sideways. So the market sort of came into a consolidation right here, and obviously if you're a pattern trader, this is usually the chance where you're gonna see a lot of patterns, you know, being formed. I think we had a bearish cipher winner last week on this pair, and now the market is actually on the verge of forming another bearish advanced pattern, but this time is a Gartley pattern. And the reason why I think this is a very good setup is I'm gonna go ahead and show you. So first of all, let me show you. We had our X to A leg here, and we had a retracement 618, even though the market came very close to the 786 retracement, but we didn't quite touch it. So for the Gartley pattern, we're looking at the 127 extension. So as you can see, so because that retracement came very close to the 786 retracement, this Gartley pattern is going to turn out a very good Gartley pattern. Because of the risk to reward ratio, it's going to be very good. So let me go ahead and draw the triangle for you. So we got X to A leg right there, A to B, B to C, C to D. So this Gartley pattern will terminate at the 127 extension. As you can see, the market is just about 45 pips away from being completed, and with the momentum that this market is approaching this high, I expect that Gartley pattern to be completed hopefully in the first couple of days of this week. And another thing to have a look at is that if I bring in my Fibonacci extension, we can see that the market, the Gartley pattern, is going to terminate right where the 1618 extension is. Actually a little bit lower than that, but you know, we have a Fibonacci ratio confluence. So why is this a very good opportunity? Not only do we have a bearish advanced pattern, we have Fibonacci confluence, and look where the Gartley pattern is going to terminate. Look left, we got a little bit of structure, the previous structure, and we know that the market is trading sideways currently and is approaching this higher end channel, the top of the channel, and we know that the market on a higher time frame is showing bearish signs. So this is going to present us with a very good opportunity to try and bank some pips. Obviously, like I said, like I mentioned, the risk to reward ratio is very good, because if you take this trade, your first target is going to have to go, assuming you enter this trade at around 68.55, you're going to be looking to take your first target off at the 382 retracement, which is going to be around 66.55. So that's 200 pips on your first target, and on your second target you're looking for an extension all the way to 65.33. So just over 300 pips. So this is a very good trade, and look where your stop loss has to go. Guys, your stop loss only has to go just above this previous structure. So anywhere you put your stop loss there, anywhere, just a little over 100 pips. I mean, that is going to present you a very wonderful opportunity. I mean, taking a short there, let's look at what the risk to reward ratio is on this trade. 3-to-1. I mean, this is as good as it can get, really, guys. I'm actually gonna be posting this chart on TradingView today. Yeah. So I mean, this is a trade I'll definitely be involved in, and this is a trade I'm gonna be taking as we head into this next week of trading. I'll definitely keep my eye on this one. So anyway, I need to show you guys a few results from my signal service for the week that just ended. Unfortunately, it's been an uneventful week. I would say, for me especially, because I think we've only taken just 3 trades, and I think that's probably the main reason why I haven't been active on TradingView the last week. I think I haven't posted a single chart on TradingView last week, just because it has been uneventful. I mean, you do get those type of weeks where there isn't really nothing. I mean, even though I did have a few patterns setting up, but none of them ended up being completed. So anyway, let's take a look back at the three trade signals that I sent out last week. The first one was the euro against the pound, where we had a bullish Gartley pattern, but this ended up being stopped out, unfortunately. We lost about, I think, about 35 pips on this one, which isn't too bad. I think, let me go ahead and bring in the chart just to show you. This is by the way the chart image I sent out before the trade was actually triggered. So if I go back on the chart, and I think it was on the 1 hour, actually 1 hour time frame. So drop this down to the 1 hour time frame. Yeah, so this is the trade. Obviously we entered around 77.95, and we had the market gave us a sign that it was gonna go up, but unfortunately we didn't get that trade to even bank some profit on the first target. So the market kind of rolled over, so we took a loss on that one. And then the second trade, it was actually we had two patterns that completed at the same price, which it was a bearish bat and a bearish Gartley pattern on the pound US dollar. So that was the only winner we had last week. The market came back down, gave us about 115 pips winner on both targets. So let me just go ahead, if I can find that on the chart. The pound against the US dollar, where is it, there it is. And if that trade was on a 30-minute chart, or was it 15-minute chart? It was a 30-minute chart. So this is it. Yeah, this is the trade. Obviously, as you can see, I posted that trade a few minutes or hours before the trade actually completed, and we had the market came in. It was virtually a painless trade, because the market came in, filled us on our target, and just reversed and hit both our targets straight away. And then we had another Gartley pattern straight after that, but unfortunately that ended up being a loser. We lost about 37 pips on that one. So yeah, I think we had the Gartley pattern just followed this pattern straight after. X to A leg, A to B, B to C, C to D. So as you can see, the market came in, filled this in, and then it just rallied from there. So we took a loss on that one. So anyway, back to the results. I think I went over this results. I'm not going to go over it in details. Obviously, if you watch my last video, you are going to see all the results in details. But looking at this week that just ended, we only had 3 trades, just like the ones I just showed you. We took a lose, 35 pip lose on the euro pound bat, bullish bat, and then we had a good winner, 66 pips on target 1, 112 pips on target 2, and then we had 37 pips. So regardless of, as you can see, I mean, we had just 1 winner and 2 losses, two losers, and we still ended up the week with 106 pip winner. I mean, so far in the 3 weeks that I've started my signal service, we haven't brought in a losing week. As you can see, the first week we brought in 314 pips, 125 on the second week, 227, and 106 on the third week. And we've all done that. Look, total of 20 trades taken. So 20 trades in 4 weeks. That's an average, at least a trade a day. Obviously, you're not going to get like a trade from me every single day. I mean, sometimes you're going to get 2 trade setups, or even 3 trade setups in a day, and then the next 2 days there's not going to be anything. It just depends on when the opportunity presents itself. And I think I had an email from this guy who said he wants a refund because I promised to send him signal service every day, but that's not the way it works. I mean, if you want signal service every day, I mean, I'm trying my best to give you the best opportunity that's going to make you money, not just plucking trades. I mean, I can't just manufacture trade. I mean, I only trade advanced, but I can't manufacture. If there's no advanced patterns, you simply don't get a signal. I mean, look at all the signals I've sent you. I mean, 20 trades. We had 10 winners and 10 losers, but look at the total pips we've made on the winners, on the winning trades. 1,182 pips, and we only had just 414 pips, giving us the total profit of 768 pips. Why? Because when we win big. I mean, all our winners have been 2 target winners. I think that's probably the reason why you see the average profits on our trades 118 pips and average loss 41 pips, with just 50% winning ratio. and I keep stressing that I expect this winning ratio to end up around about 55 to 60% in the long run. So as you can see, these are all the trades that we've taken. The cipher pattern, taking 7 trades, got a 57 pip winner. And with the cipher pattern, I would expect this winning percentage to go about 60-70%, because that's what cipher patterns are the best patterns. I mean, in terms, if you know how to trade it correctly, you're gonna get the best results. The Gartley, we're not doing so well with the Gartley so far. It's kind of like, I don't know, still on 44%. The bad pattern 50%. I mean, this is not enough data for us to compare. So if I just take it's eventually you are gonna see the results. But the start has been good, and if I just flip over to the equity curve of the signal service, so as you can see, obviously this non-event happened in the first 5 weeks of the year, because obviously I haven't traded and I didn't start my signal service back then. But look at since our start, we're so far all the way up nearly 1,000 pips in the 5 weeks that we've been trading. Do I expect this equity curve to just go straight up? No, I don't. There's going to be dips. Whether I like it or not, there's going to be dips. But guys, look at the numbers. Look at the numbers. That's what I want you to focus on. This is just a number based on a 50% winning ratio. I mean, how bad is a winning ratio going to get? That's the question. But yeah, simply there it is. The results are there. I mean, people are gonna come in if you sign up, if you join my signal service. You might not join us on the best of weeks. I think people that have joined us this week, they've probably been a bit disappointed, simply because there hasn't been enough trades. I mean, but guys, in the long run, you are gonna see enough trades. I mean. But that's what I do. I wait for the right trades. I wait for the right opportunities that are going to give you winners like this. Look at all the winners. Look at how big the winners have been. Even if we've taken a losing trade. I mean, the highest we've lost on a losing trade was 85 pips. And the rest is just kind of like 20, 17, 35 pips. But if you win, you're going to win big. So don't come in expecting me to be sending you trades every day. It doesn't going to work. It's not going to work like that. The good thing is you are going to get trades. As you can see, I'm averaging 5 trades a week. So it might be on a Monday you get like 2 trades from me, and you don't get you don't get no emails from me until like Thursday. But it depends on when the trades are there, when the opportunity presents itself. If I get 20 opportunities in a week, you're going to get 20 emails. And I'm going to tell you guys it's going to happen. Because I think I had a week, I think it was in January, we had like 12 advanced patterns in the same week, and I think pretty much all of them turned out to be winners. So how much money you make on trading doesn't depend by how many trades you take. They're not related. You have to be selective, and that's what I'm trying to do. I'm selective with the trades I send out to you guys, and you can see the results for yourself. So anyway, I think that's enough for today. If you still don't know how it works, I mean, obviously just drop me an email and I'll explain it to you. And there's a link at the bottom of this page to the sign up page, and also my TradingView page. I think I should be back on TradingView this week. I can see there's a few opportunities I've seen on the charts already, so I should be back on TradingView posting a few trades. But like always, I'm going to keep the bulk of the trades for my signal service. And yeah, so. And like always, if you like what you see, especially for those people that are watching it for the first time, then please hit that like button, subscribe, share it, or anything that helps really, and I appreciate the support. In the meantime, thank you guys for watching, and see you next time.